and welcome to Startup Street. I'm Ritu Singh and with me is Shruti Mishra. Here are the top headlines from the startup space. Battery tech startup Volt 14 secures $1.87 million in a pre-Series A round of funding led by Bloom Ventures with participation from Beyond Next Ventures, Spectrum Impact, Super Morpheus and previous investor Cocoon Capital. It is set to utilize the funds for scaling up manufacturing of its anodes and to strengthen the team.
LifeChart, a health tech startup focused on gut wellness, has raised $360,000 in an extended seed round for its gut health brand, Gutify, led by Prajay Advisors, the family office of the founders of Unichem Labs. The startup is aiming to bring precision diagnostics and targeted gut wellness to India's urban masses, starting with Tier 1 and Tier 2 cities.
Evara Cabs has initiated the possession of 500 electric cabs that were formerly operated by Blue Smart. This after Blue Smart suspended operations in key metros. With 220 vehicles already acquired, the remaining 180 sets will be reclaimed in the coming days.
The government informed Supreme Court that it is not concerned if real money online gaming is classified as a game of skill or chance. Government argues that such a distinction is immaterial and taxes are required to be paid.
Google tells employees it is making changes to its performance review and bonus structure, and for most staff, that means slightly smaller bonuses. John Casey, Google's global head of compensation, in an internal email said the company is making the tweaks to better reward the top performers. Well, those are the headlines that we're tracking for you today. But in what's brewing, B2B SaaS Fintech company Perfios has announced the acquisition of IHX, which is a Bangalore-based healthcare information exchange platform, to strategically expand its tech stack in the health insurance claim ecosystem. Now, this marks Perfios' third acquisition in the last 3 months and 5 strategically, and the company has said IHX currently processes more than 40% of all cashless health insurance claims in India. That represents more than 10 million transactions and 1 billion claims annually. For more on how this acquisition is going to boost Perfios' growth and the synergies it brings, joining me now is Sabyasachi Goswami, who is the CEO of Perfios. Sabyasachi, thanks very much for your time here on CNBC TV18. You know, a spate of acquisitions recently, including the last 2 ones that you did in the last 3 months. What made IHX the next strategic fit, and how does it boost your broader vision of becoming this full-spectrum tech fin platform?
Thanks, Ritu. So first, yes, this is our third acquisition in under 3 months with Clarify strengthening our fraud and risk, Credit Nirvana enhancing our capabilities on debt management, and now IHX powering our health claims engine. Now, from fraud to collection to claims, ideally we are stitching together the full fabric of BFSI intelligently. Now, our goal is very, very simple: to continue to evolve as the operating system for BFSI. And if you understand, the BFSI has 4 alphabets, and in that BFS is not only important, but equally we give importance to I as well, which is the insurance. So we are building for all the 3. Now, yes, it is 3 decisions, 3 acquisitions, but with one clear direction. And the direction is to become the operating system for BFSI, an integrated, intelligent platform that can span across the full financial services spectrum, that work across the verticals and across borders. So in this ecosystem, let me talk about IHX a bit, where every claim matters. The trust, transparency, and seamless coordination are going to be the real game changers. And in this, while the health claim,
Yeah, go ahead. Quickly, if you could wrap that answer, we'll move on to the next.
Yes. So actually, the what we have studied in the health claim space, the fragmented system that don't speak to each other only adds to this challenge. And the answer actually doesn't lie in the patchwork systems. So what we have done, what is needed today is the unified intelligent framework, exactly that IHX is building.
Got that.
And we thought we will aid that in this overall ecosystem.
Quickly, any financial contours of this deal that you could share?
Not at this point, but yeah, because there are a lot of work that's happening. So once that is done, probably you all will be the first persons to know.
And immediately, as far as the integration plan is concerned for IHX, Will it retain operational independence or be folded into Perfios' platform?
No, it will retain operational independence. It's a strong brand by itself. What we will do is we will cross-leverage the products. We have built a very strong data analytics platform. They have built a very strong tech and distribution. So when these two integrates together, ultimate beneficiary is the end consumer, which are you and me, the patients, the providers, which are the hospitals, and the payers, which are insurers. So when all of these three comes together, actually it will become the backbone of the India's health claim ecosystem. That's the objective.
And, Sabyasachi, do you foresee any synergies between IHX Hospital and the payer network and Perfios' existing BFSI clients, particularly insurance and health tech space?
Yes, absolutely. Absolutely. That's what I'm saying. This is not going to be merely a tech integration. It is, you will see, it is a system-wide upliftment and upgrade that is designed to build confidence, improve experiences not only like common man for you and me, who are the patients at the patient's party, but also will bring improvement in the experiences of the insurers and hospitals and bring long-term sustainability to the overall sector of the ecosystem. You can imagine it like building the pipes of trust across India's health claim ecosystem.
So then let me ask you, if you're building these pipes of trust across the healthcare ecosystem, beyond insurance claims, are there other areas you're looking at? Will you look to enter these areas through more acquisitions, or, what is the plan?
So, first of all, InsurTech itself is such a large space, and we are not only focused in India, but even in Southeast Asia, Middle East, and Africa. In Southeast Asia, we are a dominant player, so as to say, from InsurTech perspective. We work with globally large players there. So the focus remains to be on becoming dominant and in the BFSI space. In that process, as earlier I have communicated always, that if it fits our ecosystem from a product roadmap perspective, cultural fitment, technology and architecture fitment perspective, we are always open.
All right. So there could be more. Briefly, before we let you go, the last 30 seconds, what next for Perfios in this journey? Give us what plans you have for the coming year or so.
So, from particularly this transaction perspective, we are solving two sides of the same problem. And we are aligning the ecosystem. But what we are from a future-ready perspective, I think what we are building is, as I said, the operating system of BFSI, in which we will solve the end-to-end pain points for our consumers, which is the BFSI clients, but also how they can deliver their services seamlessly, frictionless to the end consumer, which means driving the agenda of the financial inclusion through different products and solutions that we are there to offer at scale and speed. So in one word, transforming financial services at scale and speed, driving the financial inclusion.
And we'll wait to hear more. Thank you very much for your time today, Sabyasachi, and we wish you the best. Thank you.
Thank you, Ritu.
Well, also on what's brewing, solar financing platform for rural MSMEs and households, Metafin has raised $10 million in a mix of equity and debt for its Series A funding round. The company says the fresh capital will help accelerate its mission to drive clean energy adoption across rural India. The round was led by Vertex Ventures Southeast Asia and India, with participation from existing investors, prime venture partners, and Varanium Capital, along with financial institutions including Northern Arc and AU Small Finance Bank. To take us through what's next, joining me now is Metafin's founder and CEO, Sandeep Chopra. Sandeep, welcome to Startup Street. Let's start with the core of your business. Tell us what sets Metafin's model apart from other solar financing or clean tech startups, and how do you ensure creditworthiness and manage risk, especially in rural areas where traditional underwriting models often fall short?
First of all, thank you, Shruti, for having us on the show. And this is a very relevant question that we are being asked. I think I'd like to answer this question in three parts. I think the first thing that stands us apart is that we are 100% focused on servicing rural customer, and that too in clean tech domain, which then allows us to look at the risk management much deeply and we don't end up applying, principles across the board as others do. What is required here is an effective mix of managing project risk at a retail level and then the credit risk,
Okay.
cash-based income, right? And we believe that we are, over the last 2 years, we've developed a proprietary mechanism around doing that. And last but
Sure.
not the least, very early in our journey, we realized that, look, if we have to penetrate and scale rural lending business, especially around clean tech, fintech is not the way to go, right? And
Okay.
therefore, we put something called phygital. So we follow a phygital model where we've got a good mix of feet on street, where we touch every customer that we lend to and check every installation that is installed with smartness of digital processes, right? So a combination of both,
Okay.
we believe, is required for anybody to be successful in this domain.
All right. All right, Sandeep, you financed over 3,500 solar projects across 2,500 villages so far. What are some of the tangible impacts you've seen, for example, on local businesses or livelihoods?
So I'll just give you one simple example. I mean, this was early in our days when we were scouting for these opportunities. What we realized was that the tractor financing in these areas was fairly prevalent. And the reason why people took the tractors was not only for agriculture. They used to use tractors for agriculture in the day and use the motor of that tractor in the evening to run their daily businesses. For example, an atta chakki or a flour mill, etc., etc. Because of which a working day of that guy would extend to about 14 to 16 hours. And the
Okay.
moment we got solar in the mix, those 18 hours are reduced to about 8 hours because of, parallel businesses that they could run.
Sure.
People could, or kids could actually study more because there was no diesel genset noise. So there are a lot of, benefits that we are seeing over and above
All right.
the aspect around this.
Okay. Sandeep, you claim to have helped customers save $10 million in fuel costs and cut over 16 million kilograms of carbon dioxide emissions. How does your tech-first approach to credit and energy monitoring enable this? Walk us through the technology that powers your operations and customer experience.
So I'll just give you, it's important for us to understand who the customer is. This is a typical customer where 80% of his input cost is energy, and today he's 100% dependent on diesel, right? So what we are doing is we are giving them a promise of moving to solar so that they can save that 80% and pay us back and also become more affluent. Now, one of the core principles around this business is for this promise to be true, the projects have to run. Now, the question is, if you've got such a diverse set of borrowers, which are spread out so much, it is important for us to monitor these plants on an ongoing basis, which is where we developed a proprietary IoT platform. We can monitor the plants real time. Anything that breaks, we can get into preventive maintenance up and very quickly, which means higher the uptime of these plants, more the money they save, more the diesel they replace. That explains why you've got these savings and 16 million kgs of CO2 reversal.
Okay. Okay, let's quickly now talk about the fundraise. You plan to expand beyond UP, Bihar and Jharkhand. Which new states are on your radar and what's the broader roadmap for deeper rural penetration? If you could quickly answer that.
See, I think there are two fundamental, criteria that we are using to build our business. One is solar penetration. So we are going after states where penetration is low today of solar. And two, agrarian societies, right? If you put these two lenses together or two axes together, I think our next three states that we are looking at are MP, Odisha, and Chhattisgarh in no particular order. And the idea is by the end of the year, we would have seeded these three states, which will then get accelerated over the next couple of years.
Okay. Okay. One final question before I let you go. You've got a goal that is to empower 1 million rural solar users by 2030. What will it take to reach that milestone?
I think in terms of the opportunity, there's no dearth in India. You've got 900 million people staying in rural India.
Yes.
And we've just scratched the surface. We are only looking at project financing today. We would be looking at other, categories of product. And of course, the geographical spread, which will be pan-India as we go along. So if we are able to deliver on both these axes, I think a million is certainly achievable in the medium to long term.
All right, Sandeep, wish you the very best for that goal and for that milestone, and appreciate your time. Thank you so much for joining us on Startup Street today.
Thank you so much. It's a pleasure to be here on the show.
Well, it's time for us to take a short break on that note. But up next, abCoffee, the grab-and-go coffee chain founded by Abhijit Anand, has scaled from 15 to 77 outlets within 10 months. And now it is eyeing deeper market penetration and a potential fundraise in this year. We'll get you the conversation with the founder on the other side.
Welcome back to Startup Street. abCoffee, the grab-and-go coffee chain founded by Abhijit Anand, has scaled from 15 to 77 outlets within 10 months of raising $3.4 million in funding last year. Now, the company is eyeing deeper market penetration and potential fresh fundraising in 2025. In a chat with my colleague Aishwarya Anand, the founder breaks down how abCoffee is deploying capital, keeping operations lean, and setting itself apart with a tech-first approach. Listen in.
So Abhijit, last year you guys raised $3.4 million. I want to understand, we are well into 2025. Where all have the capital been deployed till now? Are you left with anything in the bank? And are there plans to go for another round of fundraising this year?
First of all, thanks a lot, Aishwarya, for having me. Yeah, we did that around April, May last year. We were 15 outlets then. We have now scaled up to 77 outlets pan-India. We are the largest coffee chain inside business parks, second largest in Mumbai, largest in Gurgaon. We have scaled a lot of our footprint across, increased revenue by 6x in this period of just 10 months. And in addition to this, we built an entire tech stack, the entire app experience. Our app percentage is 42% of takeaway, which is 3x of the next competition or the next F&B player. So a lot of these capabilities is what we have built using the capital that we had raised last year. And we have money in the bank. And, and we are still expanding, we are still building. And there are future plans to go ahead with the fundraising plans, yeah.
Elaborate on the future plans. I mean, by the end of this year, what are the new things that we'll see abCoffee doing?
Right, so in the last year, we have scaled we expanded Delhi market. We went from 3 outlets to 28 outlets. Mumbai went from 10 outlets to 34 outlets. We opened Hyderabad and Bangalore market. So this year, we'll be going further deeper into the cities that we operate.
You know, you've been known for being to have a very capital efficient model. Tell me what goes behind it. I mean, how do you ensure that you're running very profitably without burning cash? How does that work?
Great. So to give you an idea, right, there have been a lot of coffee peers who have raised almost 85 million with a run rate of around 42 million. abCoffee is 4.5 million raised, 4.5 million run rate in just 2 years. It's one of the fastest growing, fastest revenue scale that we have reached in a very short span of also doing a lot of mistakes. I mean, I have to acknowledge that. And obviously, knowing what not to be done and definitely continuing on what to be done, right? What goes in a business model is pretty evident, right? So one of the things is how to be process and efficient in the entire operations that we run. We say we are an F&B company, we're a process and ops company, right? The way we manage inventory, the entire supply chain is self-indented into the back end, right? When we say that we use app, we don't use app just for the purpose of using app. It reduces the manpower at the store. It's cost saving, it's EBITDA for the store, right? So a lot of these capabilities have made sure that your capex is low, your operations costs are lower, hence your outlet profitability is much higher. This is the reason that our outlets which are aged 12 months and older operate at 26% EBITDA. One of the industry best in the category. Right? Now, this all happens because of the DNA that's built into the organization as a grab-and-go coffee chain and not a experience or a luxury-heavy table and chair kind of company, which is real estate heavy. Right? So that gives us the benefit to be operation light.
Help us understand the kind of SKUs that you have currently. How many do you have? And if I have to ask you, what are your top 3 selling products?
So we do cold coffees, hot coffees, international coffees like Vietnamese, Spanish, Taiwanese. We do Indian filter coffee. Then we have recently launched slushies, which are, if you remember the ice golas, we have transformed them into a modern way. So it's slushies. Mango Mania is going live. We do coconut range of entire beverages. We're the first company to launch entire 13 range of coconut beverages. In addition to beverages, we do food, so basically finger foods.
Okay, tell me the anatomy of an abCoffee cup.
So see, if I have to say a cappuccino, right? So it's espresso, which is coffee beans, and then your milk, and then foam, right? And when you look at the cup of coffee beans that we source are actually more expensive than the milk. However, in most of the normal cafes, milk is more expensive than the beans itself.
Okay.
A lot of people don't know that because you use 200 ml of milk, and that's fixed cost.
New information.
Right? But that's for commercial coffees. For a brand like us and every brand who does specialty coffee beans are definitely more expensive. And costing can vary. In a normal cafe, a cup of cappuccino could cost them 30 odd bucks.
30 odd
Just. Which can be sold to you for 300. Which is being sold to you for 300.
And how do you do it then?
Coffee at abCoffee is 1/3 of the market. A cappuccino is 97, an Americano is 87, a cold coffee is 117.
What does an average order cart value look like?
208 rupees.
208 rupees. Okay. So considering that you're playing, in terms of pricing, you're playing in the mass premium range. I think I can call you that, right? What is the kind of demography mix that we are seeing from the urban cities, from the Bharat market, because that is the next big frontier for any D2C startup going forward. Are you looking at that space? What are the plans there, or are you already getting a lot of customers from that space?
So again, a lot of our business is hinged to where we are located, right? And we are as of now located in NCR, Bombay, Bangalore, and Hyderabad. So still all tier 1, right? But to answer your question, I do see that there is an incredible depth in the market when it comes to Bharat market. But again, for us to strategize, how do we expand? We look at depth more than the width. And hence we are right now focusing on the cities that we were located in.
All right, on that note, we're going to wrap up this edition of Startup Street. Thank you very much for watching. Stay with us. More news and updates will come up on the other side.